Oh, coming back to the email sent by Deepika, the story continues. In the previous video, which is part 2, we discussed about her entry in TD Power Systems and we verified whether these ranges have been marked correctly on the chart. This was a positional trade taken on the weekly time frame chart. So now let's look at the trade management and things like that. So she has mentioned the pivot point, buy range, sell range, stop loss range. But till here, she has not mentioned where exactly what the stop loss was put. Because when you take a trade, obviously you have to put the stop loss somewhere, right? So let's continue with the email. And one request to all of you, since I am a SEBI registered research analyst, please at least once go through my standard disclaimer, which is in the YouTube description. Let's come back to the email. After executing the trade, I was watching the daily price range. So she's saying she was watching the range. So range means high and low. I placed alert signals near the important ranges in trading platform. So she placed alerts. So let's go back to the weekly chart. So she took the trade at the yellow line and then she placed alerts at these levels. So for example, she must have placed an alert at 525.10. Then she must have placed an alert at 508.55 because that is the range. Placing alert does not mean placing stop loss. Okay, and placing alert does not mean that you know what to do after the alert gets hit. Next, she must have placed alerts at these two levels as well, 690.95, 663.30. That is what she is mentioning in the email. I placed alert signals near the important ranges in the trading platform. The price moved close to the stop loss range and I got a bit confused about whether I should sell half of the position or continue holding. This is what I was telling you. Just because you place an alert does not mean that you know what to do when the alert gets hit. Okay? So the confusion comes when you don't know what to do when the alert gets hit. Okay? So price moved close to the stop loss range. So let's check. So the price definitely moved close to the stop loss range she had bought on Monday. So we look at daily chart. So this is 15 September. So this was the day she bought. Let me mark that. This green candle, yeah. See, that was the day she bought and then it started moving down. Where is the stop loss range? 52510, 508.55. So let's do that. So 525.10 and let's mark it's a red line. And then the next stop loss range is 508.55. So let's do that. So 508.55. Wait. Let me draw another line here. Yeah. 508.55. So on the daily chart, this is how the range looks like. So let me remove this base. Yeah. So yellow line is where she bought. What is this red line? Yeah. Yellow line is where she bought on this day. The price started moving down. See, it came very close to the stop loss. Probably it hit its alert. And that is when she felt confused. She did not know what to do because, see, this candle, this green candle could have easily been a large red candle. Okay. Now, I don't know where she has kept the stop loss. Let's check her email. However, since it did not touch the stop loss, I decided to hold the position. So she is saying that the stock started to come down. It hit her first alert, but it did not hit her stop loss. So let's just assume that she put her stop loss at 8% because that is what I teach. 8% or 7%. Let's just assume she put the stop loss at 8%. which is 554 multiplied by 0.92. 554 multiplied by 0.92, which is 509.68. So let's do that. So 509.68. And let's do this. Okay. So now you will see that dotted red line, that's her real stop loss. And this is the alert. So she's saying her stop loss was not hit. So she decided to hold on to the position. So she took that risk. When this day closed, let me show you. Yeah. So when this day closed, her stop loss was hit, but the price bounced off the stop loss uh, range. But her main stop loss was here. So she held on to the stock. You notice the price is coming down, but the volume is also low. That could have been a reason that she did not sell the stock, because there is no sign of institutional selling. Later, the price reached around 659, but then there were continuous negative candles for almost a week. Price reached around 659. Later, the price reached around 659. Now she is moving forward. So let me remove this. So now she is talking 659 range, this one. Now she is saying that the price reached here, but there were continuous red candles for 1, 2, 3, 4, 5, 6. This is the period she is talking about. Thankfully, the stock recovered before hitting her stop loss. But then there were continuous negative candles for almost a week, and again I got confused about whether to exit or hold the position, but the volume was below average and volume was decreasing despite the sell candles, so I waited. So you notice here she is talking about, see, all of this information coming from a beginner. It doesn't look like she is a beginner. Okay. All the while the price coming down, she is observing volume. The volume is low, which means what? Institutions are not selling. So she is getting a feeling that price is coming down on retail selling, not institutional selling. That means at some point in time, the buyers will come. And she was right. Here also, the price is coming down, volume is low, it's below average, right? So she held on to the stock because the stock was above her stop loss, thinking that there will be recovery because at some point in time, the buyers will buyers will step into the market, right? She was right here, she was right here. See, if you study price and volume, you will get a good understanding of price movement. You will get a good understanding of the stock. So this is very good. Coming from a beginner, this is very inspirational. Once it started to move up, I placed the sell order at 632 on 15 October for half of my position. So it started moving up. Then she put her order at 632. So somewhere here. So let's mark a line there. 632. So she placed when it started going up, she placed it at 632 on 15th October. So live, when the market was going on live, she places a sell order. I don't know why she does that. Okay. Now, if you look at this is 663, 690. So 632 is way below. So I have no idea why she, in the middle of the market hours, she puts a sell target there. Maybe she was measuring the distance and she wanted to book. Yeah, maybe she measured the distance and she wanted to book like 15% gain. That's the only reason she could have done it. But there was no reason for her to do this. This is a mistake. Probably this was emotionally very painful for her to watch this price movement, and this price movement, practically speaking, is emotionally very painful for a trader to watch, which is why she got scared and she put for half position, she wanted to come out here. Because she has given a lot of times from 15th of September till 15th of October, it's been 1 month she has been holding on to the stock. So it is testing her patience really. And she wants to book some gain. She wants to take some money off the table so that her 1 month does not get wasted. What if the stock completely collapses and hits her stop loss? That is what she's thinking in her mind. Then 1 month is also gone and the realized gain is also gone. Unrealized gain is also gone. Okay. That is what happens with you. That is how the market plays with your psychology. On 15th October, I don't want to miss this upward move. So this is like fear of missing out. So can you see some trading psychology being played out here? I don't want to miss this upward move this time, and also I was not sure about this trade. So now she is becoming unsure of the trade because the stock has given her emotional pain during that 1 month. Twice she has experienced emotional pain. So it's very difficult to handle profit. Forget handling stop loss. Handling profit itself is very difficult. So I placed OCO order with stop loss range 608, 10% and 666.12, 20%. So now she does something very different. So you see the confusion here. First, she places a sell target at 632, which is 15% range. She takes out half the money there. So out of 100 shares, she sells 50. So let's say she bought 8 shares. She's given it here. I think she bought 8 shares. 4 plus 2, 6 shares. Okay, 6 shares. Out of 6 shares, she sells 3 here. Okay, the remaining, she sells 3 at 15%. On the remaining 3, you know what she does? She does a 10% OCO order. OCO means what? This is 10%. This is 10%. So she will have a green line here. And this is 20%. From here, you go 20% here. Now she has a line here. I'm getting a phone call. So now, since the price is here, she places a OCO order. OCO means one cancels the other. So now that the price is here, she either wants, if the stock comes down, it will hit this price, she will be out of the trade, and this order will get cancelled automatically because one cancels the other. And if the stock goes up and hits this price, that order will automatically cancel this order. So she will be out of the stock either at 20% or 10%. So now she has become very risk averse. She at least wants to make 10% on this stock because 1 month is gone and she's not able to handle all this volatility. Okay. So beautiful risk management. At least she made sure that she doesn't lose money on this. So I would like to stop here because I'm getting an important phone call. I will continue this video in the next part, which is part 4, because there is so much to discuss. I haven't even touched comparative analysis and fundamental analysis. Okay. So she did the right thing by placing an OCO order as per her thinking, and it got executed. Now, at what point it got executed, I don't know. Okay. So I'm getting a phone call. I will come back to you in the next video. Thank you so much.